The year is almost over, so I want to talk about 3 tax tips to put more money in your wallet today. Hi, my name is Chris Passmore, and I'm your social media CPA. So we're going to talk about what I think are 3 important actions you can take before year end to reduce your income tax burden for this year. So item number 1 is accelerating deductions into this year. And this is primarily for your business. The reason why this is important is because when the CARES Act came out, one of the provisions allowed you to take your net operating loss, or any year in which you had a loss at your company, and carry those losses to prior years to offset income taxes paid in prior years. So then you can get that money back. So most companies this year are not going to have as strong of a year as you had in the past, primarily due to COVID. So you have the option now to accelerate as many deductions as possible into this year, paying for bills this year that you might normally pay in January or in February, to increase the amount of your loss this year. And the reason why that is a tip is because then you will create this loss, this NOL, that will allow you to go back and amend your tax returns and instantly get that money back that you paid in the prior years for income taxes. So just to be clear, the CARES Act allows you to take any losses created in 2018, 2019, and 2020 and carry those back for up to 5 years to recoup any taxes paid during that 5-year period. So for example, if you had a expansion that you plan to do in January, maybe open up a new office or maybe purchase some computer equipment that is $500, instead of buying that in January, you can now buy that in December, stack that loss into this year, which will then help create that NOL that can be used to amend prior year tax returns to get prior taxes paid back. The second thing I want to talk to you about today is also a result of the CARES Act, and it is a allowance to deduct up to $300 for charitable contributions. And you're probably thinking you could always deduct charitable contributions. Well, that all changed a few years ago when President Trump and the government rolled out the TCJA, and this is where they significantly increased the standard deduction for most taxpayers, meaning you don't actually count every dollar for charity or possibly home office expense. You kind of take the standard deduction and take that generic amount. When that happened, you stopped getting credit for your charitable contributions because you took the standard amount. Well, the CARES Act allows in 2020, even for those people who take the standard deduction, to make cash contributions to eligible nonprofits up to $300 and to take that as an above-the-line deduction of your taxable income. It's what's called your adjusted gross income, your AGI, and so you have up to $300 that you can donate in cash, reduce your AGI, and get the benefit for that, even if you claim that standard deduction. So that's another key tip that allows you to reduce that taxable income and also do a good deed, which we all know is important right now. The third thing, and this is a tip that I recommend every year, is a way for you to get money in your pocket today. No amended tax returns needed if you carry back your NOL, no contributions to charity needed. What you should do today is check your tax withholdings through December to see if you're underpaid or if you're overpaid. And oftentimes you can go into various online tools, maybe TurboTax, take your last paycheck, type in your income, type in the withholdings. You could probably estimate any other standard amounts that you might have in your taxes, like mortgage interest, and check, see how this year looks. And guess what? If you've overpaid and you have a refund coming, why wait until April? You can actually reduce your withholdings in December, in this month, and get that money today. So I always recommend check your withholdings at year end, see how you've done compared to where you expect to end the year. Hopefully you've overpaid, which means you can give yourself a nice little bump in your paycheck. But also if you're underpaid, it allows you to catch that up instead of being surprised when your tax returns are prepared in either March or April. Well, I hope that you find those 3 year-end tax tips useful. If you'd like to discuss any of these items, please send me a direct message. I'd be happy to talk further. Happy holidays, everybody, and I look forward to speaking with you in my next video.